Hello, everyone, and welcome to another edition of the Smart Investor Market Show, where smart investors get their up to date price analysis and market information. Okay, before we proceed, there's some announcements. Yesterday, I I included or I did a wrong link for you guys to the video, and what we had done was we analyzed the defense sector yesterday, and I sent out the wrong link to you guys. So what I'm going to do with this video is do the analysis at the first part of the video and include the analysis we did of the defense sector yesterday on the latter half of the video. So that's what we'll do it. Yes, sometimes I am not the greatest with technology and sent out the wrong link. Okay, enough of that. Today, the S&P 500, the markets in general are down. We have the S&P 500 down 26 points or 1.07%. The Nasdaq is down 1.42% at 90, and the Dow is down 183 points. And what we see happening here is the market after that, and this is sometimes normal for the markets. After we had that sell off last week, the market did recover, and then we have another sell off. What we want to do, or what the bulls want, is for the market to stay above these lows here. Remember, earlier in the week we highlighted the importance of these lows. If the market stays above these lows, maybe even comes down here and finds support, that wouldn't be bad for the market. But if we start to see the market breaking down significantly, that would be worrisome for this rally, and what we could see is a longer term pullback in the market. And let's just be clear, a longer term pullback is due. Because let me just compress the charts. As you can see, from November we have had a pretty strong rally. November 20 November of last year, pretty strong rally. So that was the last time we had a major pullback. Between February and September, October, we had a rally. The market pulled back, and then we have just been rallying up. So we are due for some sort of rally or some sort of pullback soon. So I don't think it's time to panic just yet. But just remember uh, that if we do close below these lows that I'm highlighting here, that would be worrisome, and we could see a larger pullback in the market. Are we at the beginning, or are we at the top of the market? I mean, it's difficult to say at this point in time, and only time will tell. But when the market does eventually top out and this bull market comes to an end, it will be plainly obvious by or from the charts. And obviously we'll be here to analyze it and give you the real-time analysis, because during 2007 2008 market crash, it took a number of months for the market to really develop, and for the markets to turn around fully. It just didn't happen overnight. Yes, sometimes markets can decline overnight, but if you pay attention to this show and pay attention to what the markets are doing daily, then you will see, or then you will have a better understanding of what is happening. Part of the problem when markets decline is it catches people suddenly. It catches them flat-footed because they haven't been paying attention to the market, and that is the problem. Looking at the Dow Jones Industrial Average, similar chart situation. The market is down sharply on the day. It's coming up on some minor support here, at 21,790, 21,800 level. And if we start to pierce down below this level, it could signal a wider pullback into the 21.4. And if we close below the 21,000, we could be down into the 20,000 region. Okay, how are the other markets really really responding to this. Let me just take a look at the overseas markets, and this really hasn't updated yet. But the German DAX is pulling back, along with the S&P 500, and the FTSE in England is also pulling back. Now, there has been a terrorist attack in Barcelona, and some folks are saying that is having an effect on the market, and it could be, because in times of geopolitical risk and uncertainty, we could see investors just dump stocks, and especially around this August, the late August period, when I have said that it is a time when we get increased market volatility, and a time when the markets can be uncertain. Uh, the investors, hedge funds know this, and people who trade seasonally know this, and sometimes they look, just for any reason to sell the market. Taking a look at at the US dollar index is up slightly on the morning. We are coming in at the 93.59 level, 93.59 in the US dollar. Market still bouncing from support in the 93 level. So the US dollar bulls can see some hope that if we do if this level 93 level does turn out to be support, we could see the dollar make some recovery into the 96 level, short term. Looking at the euro currency found support at 117, and is kind of meandering. It's not reacting much to the decline in stocks at this point in time. The currency that normally reacts to the volatility is the Japanese yen, and the Japanese yen is up on the morning, looking to challenge the 92 level, and if that level is taken, it will challenge the 93 level. So if we do see a longer term sell off in the stock market, look for this Japanese yen. We could see a rise in Japanese yen. Taking a look at the gold market, gold is up on the day. Well, the last time I checked, gold was up, and yes, it's coming up. As I said before, this area of resistance at the 1300 level, the market is coming up onto the 1300 level, and a test for the bulls will be to see if the market can close above 1300. If that close does take place, then that would be a bullish sign for gold, and we could see further gains here in the market. I'm not going to say the market is going to explode or take off, but if it above 1300, you probably want to be a buyer of a gold. I know my system will be a buyer of gold above 1300. But as is the case when you're buying gold, when you're buying silver, uh, you have to be careful. You have to manage the position properly, because this is not a runaway bull market in gold, and the positions normally have to be managed properly, because sometimes you get a breakout in the market. Let me just illustrate it here. Sometimes you may get a breakout in the market break out, then it comes back down first before going back up again, or it may come back down before going back up again. And if you are over leveraged, you have too big of a position on. When the market comes back down, you'll get frightened, and you will exit because you see a loss. So just be careful how you manage these these longer term positions, or these positions in gold. How can you invest in gold? ETFs, physical metal. The physical metal is also a good unleveraged position to have in gold. So I'll actually be keeping my eye out on this gold market to see if we're in a breakout scenario. If this is actually breaking out. I know a number of folks have been calling for a breakout in gold for a number of years and have been looking for this bull market in gold. And I can say this chart pattern here is fairly positive for gold at this point in time. Taking a look at, and for those of you who want to invest in gold, you can go to smartinvestorcentral.com, and I'll actually be sending out an email shortly, within the next couple of days, about gold. So keep a lookout for that. Let's take a look at crude oil. Unlike gold, crude oil is in a malaise. Market is not really going anywhere. It's up, it's down, it's up, it's down. And crude is stuck between this $55 region and $40. That is where crude oil is stuck. And I see market is not really doing anything to break out of this sideways price action we are seeing in crude oil. Okay, that is really it for the today's market analysis. It's being recorded at 3:05 Eastern, or 3:08 now Eastern time. The markets are still down on the day. Let's hope for the bull's sake that we don't really get accelerated selling here at this point in time, where Dow just crossed down below 205, or just crossed down below 200. So Dow is at 200, down 205. The Nasdaq down 100, and the S&P 500 down 29. The Russell is down 14, and the VIX, curiously, the VIX is up 14%, or sorry, up 25%, 2.97. Let's just take a look at the VIX. Let's just take a look at the VIX. And as you can see, volatility is spiking up, spiking to the upside. Now, what I will do is I'll cut the analysis for today at this point in time, and we'll go into the analysis for the defense sector that I did yesterday. So I will just attach it to the final portion of this video. Remember, subscribe to the channel so you can get instant notifications, and we'll go into the analysis of the defense sector now. Thank you. The first one I will look at is Lockheed Martin. Has done very, very well. I know a couple of people who said that they have been holding on to this stock for quite some time. Let's just take a broader look at this stock. As you can see, it bottomed just at $60, and we're currently at $305. So almost a 500% move since that move down in 2009. Huge rally, huge move up. And when I'm looking at stocks to buy, this is what I like to see. I like to see higher highs, higher lows, the market moving up steadily. Now, this is a stock, and this is something I like to see when you're buying stock. There's a tendency for investors, for example, let's say when the market was at 109, they may say it has gone too high, and they may be reluctant to buy. But it's at this point in time where I believe it's very good to buy, when the market is rallying, not when the market is declining, when the market is actually rallying. So Lockheed Martin doing very well. I would hold this stock at this point in time. Defense looks good. Defense almost always looks good in the face of war and talk of war. And let's just take a look at the stock from 99. This is a stock you could have really just held on to. From 99, it went up to 120, back down to 60. You would probably have taken some profits there. And when the market bottomed in 2009, a huge move up. So Lockheed Martin looking good If it drops below 275 or 265, I'll definitely be looking to exit and take some profit off of this position. Okay, let's just move through the list. We're looking at the defense and aerospace industry at the moment. Now, the other stock I want to look at is Huntington. H H I daily. Okay, what's the first thing we do? Let's look at the broader picture, the monthly, the weeklies, and we can see that this is in a rising uptrend. Now, it's encountering resistance up at this 220 level. So this is definitely a level you have to pay attention to, because if we fail at this level, then we could see a slight sell-off in this market. So this is something that definitely keep an eye on. This market is still in a bullish move. Now let's take a look at escape. Let's get that off the screen. And again, notice we're just looking at the price action. I'm not looking at, I can tell, and it's hopefully you watch this show, you can get to a point where you're just looking at a stock, looking at the price action and saying whether this is something that you would want to buy, sell, or hold. And as you will notice, most stocks that we want to be holding on to and buys have this nice upward trending movement. This stock has been around for a while, and the market really took off in 2009 to around $40, and we're currently at $270. So nice rally in Northrop Grumman Corp defense sector. I know this is widely held among folks. The next one is, and you can see that this is just almost the complete opposite of what we saw yesterday. Yesterday the charts were dreadful, and anyone holding on to some of the stocks we spoke about yesterday, I cringe and I feel for them, because the losses probably are just piling up. Now Raytheon, RTN, another market that is in a very smooth uptrend, and another market that is doing fairly well. So this is something I will hold. If the market drops below 160 to 150, that will be cause of concern, and probably will be good to take some profits off the table. Naturally, it depends when you got in. Okay, and your time frame. Let's take a look at Rockwell Collins. COL. Rockwell Collins, again, doing fairly well. Market is in an uptrend, and in the last month or so, we have seen the market really accelerate from 110 to 125. So it's making new highs, and it's doing fairly well. This is definitely a stock to hold on to at this point in time. Notice a sharp increase from 105 up to 125. After such a sharp increase, you normally get some cooling off. Market participants cool off before probably another leg up in the market. So the sector on a whole is looking fairly good, fairly solid. Let's take a look at TDY. And normally on the show we try to cover as many stocks as possible. Remember, there are thousands of stocks out there, and we just can't cover a few at a time. We can't cover everything, but just looking at some of these stocks, hopefully, are getting an idea of what we are looking for, and the what a favorable chart pattern looks like. Okay, so TDY, Teledyne Technologies, another good stock, is at $146, and we have seen a fairly good uptrend since 2017. It has moved from 120 to 146, so it has been ticking up nicely. It hasn't been soaring or booming like Rockwell Collins, but the market is still fairly positive, and I would say that this is a hold. Now let's look at L3 L3 Technologies, Triple L. This is a stock I actually recommended buy a couple of about a year ago, I believe, and the market has really done fairly well from 120 to 180. So 50% move since that buy signal came up, or the market came on my radar for a buy signal. So very strong move to the upside, and I will still continue to hold this stock. Jonathan, my assistant really did a very good job of finding just very strong looking charts at this point in time. And just remember, the markets are up. The markets are doing well. So the majority of stocks in your portfolio should have charts similar to what I'm pointing out. If you have a portfolio of 15 stocks, hopefully the 15 of them have that nice upward trending move and has done fairly well. If you have a stock that is moving down steadily, probably it's best to exit that stock. Okay, let's take a look at Hexel Corp. Market is trading at new highs or near new highs for the year at the $55 level. But what we need to see in this stock, we see this channel developing. We want to see the stock punch above the 55 or $56 region. So we want to see the market punch above. Things remain fairly positive. I would say if you enter somewhere around here, put a stop loss around the $48 level, and hope or look for the market to really punch to the upside. If it hits 48, get out. Key to investing is normally just cut your losses short and let your profits run. So try and keep those losses very small. I know investors do the opposite. They let their losses run and the psychology behind that is I can understand. I've done it many times in the past. You get in at $53, it drops to 48. Let's say you put your stop loss at 48. It drops to 48. You say to yourself, okay, let me just hold on a little bit longer. It's going to come back. It drops to 46. You say, okay, if it just gets back to 53, which was my entry point, I will get out. The stock falls to 42, stock falls to 38, 32, and you're still holding on, trying and anticipating the market will recover. Sometimes the market never recover, and you realize a huge loss, and that's how folks let their losses really accelerate to the downside. And on the opposite hand, the stock, they enter at 53, the stock goes up to 57, let's say it goes up to 60, and then folks normally or sometimes just take that quick profit. They don't let their profits really run and rank up to the upside. They take that quick profit because the mainstream media has stated that a small profit is always desirable. A small quick profit is always desirable, and that is definitely not true. The way to invest and the way to make money is let your profits run and cut your losses short, because many small profits, you have a huge loss that can wipe out your small profits. Okay, let's look at TXT. TXT, Textron market is near its high for the year, but it's not near its all-time high, and this is one of the weaker ones in the sector. And yes, it has recovered. Uh, yes, it has recovered since 2009, since 2012. But when stocks have this overhead resistance, sometimes they can be fairly risky. If I was holding this, if I own this stock, I will still hold on to it because this at this point in time is a hold. But this resistance above is a concern, because what you will find is that every time the market rallies, it will you will have sellers selling into that rally, to take profits or get out, especially the folks who bought up here and they're just waiting for it to come back to break even, to get out. So this is still a hold, but a one of the weaker stocks in the sector. Final one we'll look at is General Dynamics. And what's the symbol here? It's GD, I believe. Just based on experience. Yes, confirming GD. General Dynamics market moving up nicely, and you know see the difference between this and the previous stock, where there's not much overhead resistance. The market is at new highs, and it is moving upward fairly nicely, and so this is definitely a fairly good stock, uh, and I will recommend a hold on this. That is what my system is saying. It's saying to hold this stock at this point in time. Yes, the market can change, the market can turn around, and that's why we pay attention to the markets every day. Just because I say, okay, this is a hold, you it doesn't mean that in next 2 weeks it's a hold or next month it's a hold. At this point in time, it's a hold, but that doesn't mean okay next week or next month it's a hold. Because things can change, price action can change, and that's why we pay attention to the markets every day, or at least every week. Look at the markets every week to see what's happening in them, and then uh, especially if things turn around, and we have been rallying for a number of years, things may turn around, and it's folks who pay attention to their portfolio and pay attention to what they're doing, who will get out and even profit from the decline, because there is a way to profit if the market declines, and it's not about shorting stocks or anything. There are sectors that may move up or will move to the upside, so it's a matter of just exiting the ones that are going down and rotating into the ones that are moving upwards. That's a basic principle. Okay, thank you very much for listening to the show. What you can do is subscribe to the channel. If you have any questions, send to info@smartinvestorcentral.com. Thank you very much for listening, and I hope you have a wonderful day. This is Beyond signing out.